Welcome back to the Deep Dive. Today, we're going to be looking ahead to 2025 and beyond, specifically at the world of directors and officers insurance.
Yeah.
That coverage that protects company leaders from lawsuits.
Yes, and we'll be diving into a recent report on the D&O insurance market outlook. This deep dive is for you, even if you aren't in the C-suite. Because this report gives us some serious insight into the anxieties and trends impacting businesses right now.
And why should you care? Well, if you're invested in the market, these trends directly impact the companies you're backing. Plus, with all the talk about economic uncertainty, this report unpacks how that translates into risks for those at the helm of businesses.
It really does. One of the most fascinating points is the prediction of a slowdown in D&O insurance rate decreases.
Okay.
We might even see increases for some companies, which signals growing concern about several risk factors.
Like the calm waters are about to get a little rough.
Yeah.
The report even says that price decreases may have gone too far, suggesting a potential market correction is on the horizon.
Exactly. It suggests the market may be due for a course correction.
Yeah.
In part because of the more complex risks company leaders are facing, like the growing use of AI. The report says a whopping 69% of public companies are using AI in due diligence processes.
That number really surprised me.
Mm-hmm.
It seems like AI is everywhere.
Yeah.
But most people probably don't think about the legal risks that come along with it.
It's not just about the technology itself. It's about who's responsible when things go wrong.
Oh, okay.
Have you ever considered that a company's board might not even fully understand how AI is being used by their organization, especially by third parties?
Oh, interesting.
This can create a real liability for directors and officers.
So it's like a legal landmine.
Mm-hmm.
What kind of issues could arise from AI being used for business decisions?
Well, think about it. AI relies on algorithms and data.
Sure.
And if those algorithms are biased or the data is flawed, it can lead to discriminatory outcomes.
Right.
For example, imagine a bank using AI to assess loan applications.
Okay, yeah.
If the algorithm is trained on biased data, it might unfairly deny loans to certain groups of people.
Makes sense.
That could easily lead to legal action.
And then there's the whole issue of transparency.
Right.
If companies aren't clear about how they're using AI, it can create distrust and make it harder to address problems when they arise.
Absolutely. Transparency is key.
Yeah.
Companies need to be upfront about their use of AI, both internally and externally. They need to explain how they're mitigating the risks and ensuring fairness and accountability. It's not just about avoiding legal trouble. It's about maintaining ethical standards and building trust with stakeholders.
Speaking of legal trouble, the report also highlights the rising number of lawsuits against company leaders.
That's right.
Especially related to IPOs and those SPACs we've been hearing so much about.
That's right. There's been an uptick in securities class action lawsuits, or SCAs, where shareholders allege that companies or their leaders violated securities laws, often by making misleading statements or failing to disclose crucial information.
So essentially, investors are saying, hey, you didn't tell us the whole story, and now we've lost money.
Precisely.
Got it.
And the report predicts that SCA filings could reach their highest point since 2020 by the end of 2024, exceeding 200 filings.
Wow.
That's something both companies and their leaders need to pay close attention to.
And it's not just about the financial losses from settlements or judgments.
Right.
There's also the reputational damage that can come with these lawsuits.
Absolutely. These lawsuits can tarnish a company's image and make it harder to attract investors and customers in the future. It really does raise the stakes when it comes to corporate accountability.
Now let's turn our attention to another hot-button issue that's impacting D&O liability ESG.
Right.
That stands for environmental, social, and governance factors. And it's becoming a major focus for investors and the public alike. The report highlights how ESG considerations are influencing the D&O landscape.
That's right. Companies are increasingly being held accountable for their environmental and social impact, and their leaders are feeling the pressure. Stakeholders, regulators, and the public are all scrutinizing how companies are addressing issues like climate change, diversity, and ethical business practices.
It's like companies can't just say they care about the environment anymore. They have to actually prove it. And if they fall short, they could face serious consequences.
Yes. We're seeing a rise in climate change lawsuits
Wow.
against companies that have allegedly failed to disclose climate risks
Oh,
or haven't adopted eco-friendly practices.
got it.
And with the SEC's final climate risk disclosure rule from March 2024,
Yeah.
companies now have to be much more transparent about their climate-related risks
Wow.
in their annual reports.
So there's a lot more scrutiny now. And that's putting even more pressure on company leaders
Yeah.
to make sure they're doing the right thing, not just for their bottom line,
Mm-hmm.
but for the planet and society as a whole.
Absolutely. It's not just about avoiding lawsuits. It's about doing what's right
Right.
and building a sustainable future.
This brings us to a major point in the report,
Yeah.
the connection between macroeconomic factors and D&O risks.
Mm-hmm.
It feels like we're in a time of major economic uncertainty. How does that play into all of this?
Well, the report doesn't paint the rosiest picture.
Okay.
Bankruptcy and insolvency risks are on the rise, with Chapter 11 filings jumping by almost 52%
Whoa.
from 2023 to 2024. Several factors are at play here.
That's a huge increase. What's driving that trend? What should investors be watching for?
There are several factors contributing to this rise in bankruptcies. We're seeing higher interest rates,
Yeah.
persistent inflation,
Sure.
and struggles in the commercial real estate market, all of which are putting pressure on businesses and their leaders.
Okay, let's unpack that a bit.
Sure.
How are these factors impacting companies and creating more risk for those in charge?
Higher interest rates make it more expensive for companies to borrow money,
Right.
which can strain their growth plans and financial stability.
Makes sense.
Inflation erodes the purchasing power
Yeah.
of consumers and businesses,
Yeah.
leading to decreased demand
Right.
and a struggling commercial real estate market with a massive $1.7 trillion of industry debt
What?
set to mature between 2024 and 2026. Adds another layer of concern.
Wow, that's a staggering amount of debt.
Yeah.
It sounds like refinancing that debt at potentially higher interest rates could create even more strain on the commercial real estate sector.
Exactly. It creates a ripple effect. This kind of economic turmoil
Yeah.
could easily lead to more claims and payouts for D&O insurers,
Right.
which could ultimately drive up the cost of coverage for everyone.
It seems like we're heading into a bit of a perfect storm here.
Yeah.
With all these different risk factors converging at the same time. And on top of that, there are those geopolitical uncertainties the report mentions, like the ongoing war in Ukraine and tensions in other parts of the world.
You're absolutely right.
Yeah.
These global events add yet another layer of risk, especially for companies operating in multiple countries.
Right.
They have to navigate complex webs of sanctions, supply chain disruptions, and political instability.
So what can companies do to prepare for this potentially turbulent future? The report must offer some guidance, right?
It does. And one of the most important recommendations is for companies to carefully examine their existing D&O insurance coverage.
Okay.
They need to make sure they have adequate protection in light of these emerging risks and changing market conditions.
It's like making sure your safety net is strong enough to catch you if you fall.
Exactly. And it's not just about the amount of coverage, but also the specific terms and conditions of the policy.
Right.
Companies need to understand what's covered, what's excluded, and how the policy will respond in different situations.
Yeah.
This is where working closely with experienced insurance professionals becomes crucial.
So it's not a set it and forget it kind of thing.
Right.
You need to regularly review and update your coverage as the risk landscape evolves.
Absolutely. And the report also stresses the importance of seeking expert advice.
Okay.
Companies should consult with insurance brokers, loss control experts, and underwriters to gain a better understanding of their D&O exposures and the factors that are driving costs in the market.
So it's like getting a checkup for your business's risk profile to identify any vulnerabilities before they become big problems.
That's a great way to put it.
Now, when it comes to specific risks like AI, the report offers some practical advice.
It does?
It recommends that company leadership teams carefully review the risks associated with using AI in the boardroom and familiarize themselves with any relevant regulations.
Right.
So it's not about banning AI, but about using it responsibly with a clear understanding of the potential pitfalls.
Precisely. It's about establishing clear policies and procedures for how AI tools should be used in the decision-making process.
Right.
Who has access to the AI?
Yeah.
How is the data being used?
Makes sense.
What safeguards are in place to prevent bias and errors?
Yeah.
These are all important questions to consider.
It sounds like transparency is crucial here.
It is.
Everyone involved, from the board of directors to the employees actually using the AI, needs to understand how it works,
Right.
its limitations, and the potential consequences if it's misused.
Transparency is absolutely essential, both within the company and when communicating with external stakeholders. If a company is using AI in a way that could impact investors or customers, they need to be upfront about it and explain how they're mitigating the risks.
Yeah.
It's all about building trust.
Okay, we've covered a lot of ground here, from AI and ESG to the broader economic forces at play.
Right.
What's the key takeaway for our listeners so far? What should they be thinking about as they navigate their own careers and investments?
I think the most important message is that the D&O landscape is changing rapidly. The risks are increasing.
Right.
The stakes are higher. And the old ways of doing things may no longer be enough. Whether you're a company leader, an investor, or simply someone interested in the business world.
Right.
It's crucial to stay informed about these trends and understand how they could impact you.
It's like we're all in this boat together.
Yeah.
And we need to be aware of the changing currents and potential storms on the horizon.
That's a great analogy. As we've discussed, there are steps we can take
to
navigate these challenges.
Right.
But it starts with acknowledging that the landscape is shifting and being willing to adapt.
So it's not about panicking, but about being proactive and informed. What are some of the potential consequences companies could face if they don't adapt to this changing D&O landscape?
Well, we've already talked about the financial losses that can stem from lawsuits.
Right.
But there are also reputational risks, regulatory scrutiny, and even the possibility of criminal charges in some cases.
It's a sobering reminder that being a company leader isn't just about making profits.
Right.
It's about upholding ethical standards, protecting stakeholders, and ensuring the long-term sustainability of the business.
Absolutely. And in today's complex and rapidly changing world, that responsibility is more important than ever.
This leads us to a final thought-provoking question for our listeners. We've talked about the potential consequences for companies and their leaders. If D&O insurance becomes more expensive and harder to obtain. But what about the potential consequences for individual investors?
That's a great question. If companies are struggling to secure affordable D&O coverage, it could ultimately impact their bottom line and their ability to attract and retain top talent, which could lead to decreased shareholder value. And potentially even make it harder for companies to raise capital.
So it's a ripple effect that could eventually reach the pockets of everyday investors.
Exactly. It really underscores the interconnectedness of the business world. And how these trends can have far-reaching consequences.
It's all about connecting the dots and seeing the bigger picture.
Precisely. And I think that's what makes this topic so fascinating. It's not just about insurance. It's about the future of business, the role of leadership, and the challenges and opportunities we all face in this rapidly evolving world.
We'll continue our deep dive into the D&O insurance market after a short break. Stay with us. We're back and ready to continue our deep dive into the D&O insurance market. Before the break, we were talking about how economic uncertainty and global events are contributing to a rise in risks for company leaders.
Yes, and it's important to remember that these risks aren't just theoretical. They can have real-world consequences for companies and their stakeholders. For example, we've seen a number of high-profile corporate scandals in recent years where companies have faced significant financial losses and reputational damage due to ethical lapses or failures in risk management.
It's a reminder that companies need to be proactive and vigilant when it comes to managing these risks. They can't afford to be complacent.
That's right. And one of the most important steps companies can take is to create a strong culture of risk management. This means having clear policies and procedures in place, providing regular training to employees, and fostering an environment where people feel comfortable speaking up about potential
It
problems.
sounds like it's not just about having the right insurance policy.
Right.
It's about having the right mindset and culture within the company.
Exactly.
Yeah.
It's about creating a culture where everyone understands the importance of risk management
Yeah.
and is committed to doing their part to mitigate it.
And this culture of risk management needs to extend beyond the company itself
Mm-hmm.
to include third-party vendors and partners. As we discussed earlier,
Yeah.
the use of AI by third parties can create a significant liability for companies
Mm-hmm.
if they're not careful.
That's a crucial point. Companies need to carefully vet their third-party vendors
Yeah.
and make sure they have strong risk management practices in place. They also need to have clear contracts in place that outline the responsibilities of each party when it comes to data security,
Yeah.
privacy, and ethical considerations.
It's like companies need to do their due diligence, not just on the technology itself, but also on the people and companies they're working with.
Absolutely. It's about taking a holistic approach to risk management and recognizing that the weakest link in the chain
Yeah.
can create significant vulnerabilities.
So what are some specific steps companies can take to ensure they're adequately covered for D&O risks?
Well, one of the first steps is to conduct a thorough risk assessment. This involves identifying the potential risks facing the company,
Okay.
assessing the likelihood and potential impact of those risks, and developing strategies to mitigate them.
It sounds like a risk assessment is kind of like a map
Yeah.
that helps companies navigate the D&O landscape
Right.
and identify potential hazards.
That's a great way to think about it.
And what about the role of the board of directors in all of this?
Mm-hmm.
The report must have some recommendations for how boards can effectively oversee D&O risks.
Absolutely. The report emphasizes the importance of boards
Yeah.
be actively engaged in D&O risk oversight. This includes having a clear understanding of the company's risk profile, regularly reviewing D&O insurance policies, and ensuring that management has implemented appropriate risk mitigation strategies.
So it's not enough for boards to just rubber stamp management's decisions.
Right.
They need to be actively involved in the process and ask tough questions.
That's right. Boards need to be proactive and challenge management to
Yeah.
think critically about potential risks and how to address them.
Makes sense.
They also need to ensure that the company has adequate resources dedicated to risk management
Okay.
and that there are clear lines of communication between management and the board.
It sounds like communication is key here.
Yeah.
Everyone needs to be on the same page and working together to identify and manage D&O risks.
Exactly. And this communication needs to extend beyond the company itself to include external stakeholders,
Okay.
such as investors and regulators.
Right.
Companies need to be transparent about their risk management practices
Huh?
and be prepared to answer questions from stakeholders.
This all makes sense. But I'm curious about the practical implications for individual investors.
Yeah,
How can we use this information to make more informed investment decisions?
that's a great question. One of the key things investors can do
Yeah.
is to pay attention to the D&O risk disclosures
Yeah.
in company filings.
Okay.
These disclosures can provide valuable insights into the company's risk profile and how management is addressing potential risks.
So it's not enough to just look at the financial statements.
Right.
We need to dig deeper and understand the company's approach to risk management. Are there any red flags investors should watch out for?
Certainly. Some red flags to watch for include a history of D&O lawsuits
Great.
or regulatory actions,
Uh-huh.
a lack of transparency about risk management practices,
Right.
or a high turnover rate among senior management.
Oh, interesting.
These could be signs that a company isn't taking D&O risks seriously.
This is all incredibly helpful information for investors. It's a reminder that due diligence isn't just about understanding a company's financial performance.
Right.
It's also about understanding how they manage risk.
Precisely. And as we've discussed, the D&O landscape is becoming increasingly complex.
Right.
Investors who take the time to understand these risks will be better positioned to make informed decisions
Yeah.
and protect their investments.
We've covered a lot of ground in this deep dive.
Yeah.
As we wrap up,
Yeah.
I'd love to hear your final thoughts on the key takeaways for our listeners.
Well, I think the most important message
Mhm.
is that D&O risk is everyone's business.
Yeah.
Whether you're a company leader, an
Right.
investor, or simply someone interested in the business world, it's essential to understand the evolving risks and challenges facing companies today.
It's a reminder that we're all interconnected
Yeah.
and that the decisions made by company leaders can have far-reaching consequences.
Absolutely. And I encourage everyone to stay informed,
Yeah,
ask questions, and challenge assumptions.
makes sense.
The more we understand about D&O risk,
Right.
the better equipped we'll be to navigate the complexities of the business world and create a more stable and sustainable future for all.
Well said. And on that note,
Yeah.
we want to thank you for joining us on the deep dive. We hope you found this exploration of the D&O insurance market insightful and informative.
Thanks for having me.
Until next time, keep diving deeper. We've been talking about the D&O insurance market and how it's being impacted by a whole range of factors, from economic uncertainty to the rise of AI.
It's really fascinating to see how these different threads are interwoven.
Yeah.
We often think about things like climate change or social justice as separate from the world of business and finance.
Right.
But the reality is they're all interconnected.
It's like that butterfly effect idea, right?
Mm-hmm.
A small change in one part of the system can ripple out and have a huge impact on something seemingly unrelated.
Exactly. And that's why it's so important to have a holistic view, to see the bigger picture and understand how these different forces are interacting. It's a call for systems thinking.
I love that phrase, systems thinking.
Yeah.
It really highlights how we can't just look at things in isolation anymore. We have to consider the interconnectedness of everything.
Precisely. And I think that's a valuable lesson for all of us. Whether we're running a business, investing in the stock market, or simply trying to make sense of the world around us.
Yeah.
We need to think systemically,
Right.
connect the dots, and be prepared for the unexpected.
Well, that's a great takeaway for our listeners to ponder. As we wrap up this deep dive into the D&O insurance market,
Yeah.
we've covered a lot of ground, from the macroeconomic trends to the specific risks posed by AI and ESG considerations. It's a lot to digest,
Right.
but hopefully it's given you a new perspective on these complex issues.
I certainly hope so. And I want to reiterate the importance of staying informed and engaged. These trends are constantly evolving, so it's crucial to keep learning, asking questions, and challenging assumptions.
Absolutely. Knowledge is power, as they say. And by understanding these forces,
Right.
we can make more informed decisions, both in our professional lives and as citizens of the world.
Well said. And on that note, I want to thank you again for joining us on this deep dive into the D&O insurance market and the future of business.
Yeah.
We encourage you to continue exploring these topics and to share your thoughts and insights with us. Until next time, keep diving deeper.
And keep those critical thinking skills sharp. We'll see you on the next deep dive.